Hi all, it's 4 October 2021 today. I'm going to touch on a very important topic because there are so many new investors and traders in the markets that I feel that given my years of experience in the financial market, it's important to know one thing, which is on position sizing. One wouldn't know your risk well, control your risk well if you don't know about position sizing. As always, I appreciate a like for this video and do subscribe to my YouTube channel as I will be touching out more on such topics to help very new traders and investors to know more about how to allocate their portfolio. So even the best bet will not save our portfolio if the position size for the wrong bet is so sizable. Why do I say that? We ourselves have to know what's our personality, what's our risk appetite, and whether can you sleep well if a stock goes down 10% a day. Are you a trader at heart who will cut loss? Or are you an investor who will hold on as long as your investment thesis is intact, even if it dropped 10, 20, 30%? You ask yourself, number two, what's your age? Do you know what is your strength in your investing or the trading game? Do you have the domain knowledge of a particular sector that you invest into? Or you're super good at numbers that you can see the correlation between stock A with stock B, and stock A in this sector A is related to set stock B in sector B, and you know how the number crunching will be. Number three, all in all, nothing can save you if you bet the wrong company, wrong financial instrument, and you place such a big position of portfolio into that wrong bet. For instance, you allocate 80-90% of your entire portfolio into that single bet, and that single bet lost you 100%, which means that you'll remain 10% even if it makes 200%, you'll still be down 80% because your 80% of portfolio is completely wiped out and left with the 10% multiplied by two times, still only having 20%. It's very difficult for you to recover back to your 100% and even make returns going forward. So it is very important to know how to size out your position size for investment or trade. But this is also tied to your risk appetite. So you must know what kind of drawdown will you do. Will happen that you need to cut your position, or if you are the long-term investors, even if you draw down in the 10-20%, you're so confident that your research and analysis is correct that drawdown of 10, 20, 30% will not affect your sleep at night. So what are the asset classes to consider? The typical asset classes are equities, bonds, commodities, cash, and even nowadays cryptocurrencies like Bitcoin, ETH, Dogecoin have been very well known. But back to my point earlier about risk appetite and volatility. Do you know that Bitcoin in the last few months has experienced a seesaw ride, which at its peak it was over 60 over $1,000, and within 1 month to 2 months it fell from the over 60 over thousand to as low as 28,000. That's more than 50% drop in a single month. Can you take this kind of drawdown? Drawdown meaning the price drop from your peak. So you have to ask yourself, what's your personality? Do you know yourself well? And what's your risk appetite? Is there any particular asset class, like for instance crypto, that if it drop 50-60% is not a kind of asset that you can sleep well at night? These are things that you have to understand, and I couldn't answer for yourself. Know your risk appetite, know your personality, and know whether are you at heart an investor or a trader. Just give you an example, equally weighted portfolio where stock A you allocate 33% of your total portfolio, stock B you allocate 33%, and stock C you allocate 33%, and stock A up 10%, stock B down 5%, stock C up 5%. Net net, you taking the considering the weightage of the port into each stock, the portfolio return is 3.3%. But look at another portfolio. If you stock A is up 100%, stock B up down 50%, and stock C is flat, what will happen? And you allocate 10% into stock A, 80% into stock B, and 10% into stock C, and 80% weightage into stock B down for 50% will mean your portfolio is down 40%. Even if you make 100% or 10% allocation into stock A, you make 10% there, is for negative 40% plus 10%, which your portfolio return is down 30%. This is where the big problem is. So you have to ask yourself, what kind of weightage do you want to allocate into each stock? And what kind of situation do you cut loss? Or do you still hold it? These are the questions that you yourself, knowing your own personality, knowing your own risk appetite, will have to think through. What is beta? Beta on Investopedia, you can search it, is the measure of volatility and systematic risk of a security or portfolio compared to the whole market. In layman's terms, or rather my own definition, is how one stock move compared to that of the general market. For instance, if a company A beta is 1.2, and the general market move up 10%, 1.2 times 10% is moving up 12% for the stock. And if a beta is 1.5, you see, and the stock market go down 10%, and it's 1.51 multiplied by 10, that's down 15%. So the question is, what is your portfolio beta? Do you know how it moved compared to the rest of the market? This is very important because you yourself have to have a knowledge and know how to compute it. And one stock A may move in a similar pattern compared to stock B, and it can move like even 10% more, 20% of the stock B price movement. You'll see that I've done relative pricing in my various videos for different stock analysis, because there's some sort of correlation, and you yourself have to know very well. And this forms part of my series on portfolio management and position sizing. This is meant to start off your thinking about what's your portfolio beta, what's your individual stock weightage, how much are you going to allocate, not only stock, but it could be a financial instrument, an investment in a commodities future, etc. But commodities future with its own leverage is a different way of trading, and that had to be considered. How much are you going to allocate into trading, or how much are you going to allocate into investment? You have to stay very knowledgeable, very informed, and keep learning. That's where you can improve your portfolio return over time. As I mentioned, this is kick off my series of portfolio management and position sizing. Hopefully, novice investor and trader will find this helpful. As always, this should not be construed as any investment or trading advice. Thank you.